Good morning, everybody. It is Wednesday, February 11th, 8:27 a.m. Starting a couple minutes early here, just to remind you all, we're running a free trial to check out the chat room and live streams for 2 weeks. Just go to chartguys.com, and that way you can have access to the live stream I'm about to do after this. This is 30 minutes, and then I'm going to talk for another hour and a half during the market open, so hope to see you there. So we have jobs numbers about to come out, and we're going to see volatility. So we'll just watch that volatility for the first few minutes, and then I'll start talking about some other things. But with regards to the jobs numbers, they were trying to prepare people for the jobs numbers to be really bad. And so we're expecting really bad numbers, and we'll see if they did a good enough job giving the market the heads up. And also we got to keep in mind, this is why I like technical analysis more than fundamentals, is oftentimes, we could get a really bad number, and then that leads to an increase in probabilities of a rate cut, so the market responds bullish to it. So we'll have to see where we stand, but we know that technically daily consolidation did just start in futures, and we're going to be watching, is this going to do this and continue down, or can bulls set a daily higher low and confirm an uptrend? And so that's the question we have for the rest of the week. And the semiconductors are going to be key for that. I'm going to talk a little bit about that relationship in just a moment. As far as ticker requests, I'm going to save that for the live stream that I do for Chart Guys members at 9 a.m., just because that's a large chunk of that. And we'll see. We'll see how much I want to talk about some things, but we'll see if we have time at the end, and I'll look through some of those tickers. But here come the jobs numbers. 15-minute time frame. We've got an uptrend, and watching to see if we're going to set an hourly lower high on a bearish reaction or head up towards after hours hourly resistance on a bullish reaction. And again, I don't even look at the numbers. I just watch the price on any kind of release. FOMC, I don't listen to Powell. I don't read what he's saying. That's just my style. But the actual words and the actual numbers have never led to me making any money. It's always the price levels. Trends and price. And someone was talking about, recession stuff. And it's my same answer is the word recession has never made me any money. There's a lot of arguing back and forth over the last few years, whether we're in a recession or not, and it's just sticking to the price, sticking to the trends. Initial bull. How big a bull? There's that hourly resistance right off of it initially. Let's see that battle. If we were to reject, then we'll be watching for the possibility of an hourly inverse head and shoulders, depending on how the morning goes. But first, let's see how this test goes. That will clearly be the line in the sand in terms of resistance today if we do reject. So we'll keep checking in on that as we go. But a couple things I want to talk about before looking at some individual names. Just with regards to the approach for the trading day, I've been noticing a lot. I used to be strictly day trading every single day, 8 or 9 years of that. And then eventually shifting the last few years to focusing more on swing trading, getting better at that. And my approach to the morning has significantly shifted, in the sense that when I was full on day trading, I would sit down at the computer and my mindset would be, I need to find the trade for today. I need to, and that's a key phrase. I need to find the trade for today. It's almost like putting a burden of pressure on, I have to find something. And once I started shifting towards swing trading, I sit down at the computer on the morning and my response is, I don't know if I'm going to take a trade today. Almost every morning starts with, I'm not sure I'm going to trade today. And I almost always do still, but it's that removal from the need and the necessity to find a setup and the pressure to, we'll see, and maybe something comes to me. And I've been noticing that honestly, my day trading selection has gotten a lot better because I've gotten a lot more selective. And it's that mindset of maybe I won't take a trade today, and being much more open to that possibility to ensure that the trades that I do take are of a higher quality. So just thought I'd share that just from a mindset and psychological perspective of an approach to the trading day. And of course, if you're a full-time trader, day trader, you have a little bit of pressure where, okay, well, you need to make money. You can't just approach every day and not trade, obviously, but just something to try and shift, even just the word. I need to find the trade on the morning, or maybe I won't find a trade for this morning, relieving that pressure. NASDAQ testing that resistance again. So we could say it's an initial bull reaction and a potential daily bull flag, testing a key short-term resistance level. And the bulls, regardless of whether we break this or not at the moment, the bulls will need to confirm an hourly trend change eventually, but a nice response for the bulls, at least initially. Checking in on other sectors real quick. So XLF. XLF is important for me, and I'm not trading the financial sector right now, but if XLF confirms this weekly downtrend, that's going to be important to me from a broader market perspective, and it will make me a little bit more cautious as a bull. I've still been heavily favoring bulls overall, just because all of our lead bull sectors like XLI, all-time highs again yesterday, XLE, all-time highs again yesterday, XLB, industrials, all-time highs, IYT ended up getting all-time highs. So all these sectors, last week hitting all-time highs, this week hitting all-time highs, keeps me looking bullish. But again, if XLF does confirm that weekly downtrend, I'll be a bit more cautious because there will be the possibility that we lose monthly EMA 12, which we've been holding for 2 1/3 years at this point. So that would be significant, but just something I'm keeping an eye on, whether it just shifts my conviction as a bull a bit if that were to break. And with regards to those other sectors and my focus on swing trading, in 2026, I'm trading names and sectors that I've never traded in my entire trading career. And it's industrials. It's a little bit more on the energy sector. I've traded some energy sector before, but just want to highlight again, if I'm looking bullish, I'm not going to be looking at the Mag 7 in this environment. I'm not going to be looking at the NASDAQ even. It's chopping around sideways. So we've got to find the trending things, because obviously we make more money as traders when we are in trending environments. And so it is all those things that I just mentioned in clear daily uptrends, in breakout mode, hitting all-time highs, even, emerging markets. I have never traded emerging markets in my entire life. And EEM is something I've been watching closely, as it's been all bull to start the year. So it's ensuring that you want to have your familiar names like Tesla. I'll always love trading Tesla. It's always near the top of my profit ticker on the year over the last bunch of years. But I haven't traded Tesla. I've traded Tesla maybe a couple times this year. And it's just ensuring that we are agile enough to pivot to other things. And that confidence to pivot to other things in markets comes from confidence in your technical analysis. Because, again, as I've said many times, I don't care if I'm charting dirt. It doesn't matter what I'm charting. If there's enough volume and liquidity and it's got price levels on the chart, then I can have some confidence trading it. And so that's why it's obviously so important to build our confidence in our trading abilities, to then open the world of all markets to us so that we can maneuver and be agile and shift around to different things in different market environments. So with regards to, on that note, trending names, again, it's much easier to make money in strong trending names versus choppy sideways names. Back to the day trading perspective, there are often times where I want to identify as soon as possible on the morning whether we're going to see an inside bar that day or not. And SMH yesterday, we'll use an example. SMH was a daily inside bar. And as soon as I can recognize that an inside bar is forming, I instantly trade less. Because if we're going to view trading as a pie, and I need to get my piece of the pie, my day maker, the bigger the pie, the easier it is for me to get my piece. And so you look at Monday, the range of SMH was, we'll just do rough math here, we'll call it 1269, exact math, 1269 range. And then yesterday, the range was roughly $7, so almost half. So that means it is much harder if you've got half the range, half the pie, it's much harder for you to get the piece you're looking for. And so how do we identify if it's going to be an inside bar? Well, number one, if the prior day has some decent volatility and a wide range, that's one thing we look for. But then on the morning, I'll do something where I will mark a key level. And so just for SMH, it was, let's just look at the low of consolidation on Monday afternoon. We hit a low twice, and then we closed, and we opened higher. And so the mindset is, okay, if we fail the high of Monday and then break that consolidation low, instantly the probabilities increase that it's going to be an inside bar. And so I always want to be gauging whether something's an inside bar or not, because again, it's like I let my foot off the gas and I get even more picky and more patient, and I'm much more likely to stop after the morning and not even look for trades in the afternoon if we're forming an inside bar. And very often, if you're still in an inside bar past noon, past the most volatile time of the morning, the first hour and a half, again, the probabilities continue to increase. The inside bar is going to form as time passes. So that's just something that shifts how I approach a day. Another thing to note, right now SMH is testing the highs. And I can't tell you how often I get clues from watching multiple things. And in this instance, it's the NASDAQ and SMH. I've said many times, whether it's long or short, the NASDAQ bulls are not going to follow through unless SMH is breaking its resistance as well. And the NASDAQ bears are not going to follow through unless the semiconductors are breaking support. And that is due to the weight that semiconductors have in the NASDAQ. And so I do that for the NASDAQ and semis. I do it for SPY and QQQ. If SPY breaks a resistance level and the NASDAQ does not, it's not going to go very far. I do it for individual names in the ETFs. If, Amazon breaks its resistance and the NASDAQ doesn't, Amazon bulls probably aren't going to go very far. And so that clue helps me very often. And a more recent example is the NASDAQ broke this pre-market low on Monday with zero follow-through, but the S&P 500 didn't break that low. And so the zero follow-through is less surprising. It prevents me from getting faked out a lot if I'm watching multiple things. And it's also a good confidence gauge. If I'm in the NASDAQ and it breaks resistance, I'm keeping an eye on SMH. You got to break as well. And then once it does, okay, I've got conviction to keep holding that long because both things are doing what I want them to. And so in this instance, I can say that, the NASDAQ is not going to see any meaningful daily consolidation if the semiconductors are not consolidating. And so with this bullish reaction to the jobs numbers right now, we have the possibility that the semis are breaking their inside bar bullish and still continuing this daily bull move. And so that's key. Heading into today for me, it's going to be very important. The NASDAQ will, or I should say the semiconductors will have to weaken or the NASDAQ is a bull flag. And we just got the hourly uptrend as our guide. We have the low of yesterday. We've got an hourly higher low into the afternoon. And so I can just head into the rest of the week with a simple statement and say, if the semiconductors are in an hourly uptrend, which they have been in for days, the NASDAQ is not going to see any weakness or any meaningful weakness. And so I entered an SQQQ position yesterday up near the high of the day just as a hedge. And my reasoning was a daily lower high is the most likely result of this bounce. I was recognizing the potential of a megaphone in terms of bull break, no follow through, bull break, no follow through. And so I just grabbed a top fishing play. And so now I'm going to need to decide what I do with that position. And I'm going to be quicker to exit it. I'll keep holding it because I had a good entry. So I'll let today play out a bit. But I know that I'm going to be quicker to ditch it if the semiconductors, I pretty much need to see semiconductors lose the hourly uptrend if I'm going to keep that hedge position on. So still lead bulls there. we're still watching the software bounce, and software is now seeing a little relative weakness. There were 2 days of relative strength. Why is it relative weakness? Well, just at a glance, I can tell because here's the close and here's where we're trading in pre-market. And you compare it to the NASDAQ, here's the close and we're way above it. So just at a glance, looking at SMH, QQQ, and IGV, I can see that semiconductors are leading the way for bulls and that software is a bit weaker. And so if I do want to be looking bearish, I can say, okay, on IGV, anything under 8708 is an hourly lower high. And there is space for an hourly lower high to potentially be on the table for the morning. So if I am going to be looking bearish, I want it to be on a name where the hourly lower high is most likely, as opposed to a name that is, there's two schools of thought. If we're right up at resistance and I want to take a top fish on QQQ, that's really low risk. That's fine. But, if we're essentially, I want to have the probabilities and the most likely scenarios in my favor. And when there's a lot more space for the lower high, that's when I have more confidence making that attempt for a lower high. So that's what bears are going to be looking for today. They're going to be looking for names that have space for hourly lower highs over the high compared to the high of yesterday, and seeing if they can get an entry for it in the morning. And it also helps with the risk reward profile for the trade, because rather than using high of yesterday as a stop, you're saying, okay, that's the hourly lower high, or I'm wrong, and it's going to be a closer nearby level. And so when I entered that QQQ hedge yesterday, I wasn't going off of any daily level because there's nothing nearby. I had to go off that recent price action, and it was when we lost the 5-minute higher lows, and I just said, okay, that's it. That's the high, or that's the daily lower high, or I'm wrong. And I would have stopped out if we hit new highs with a little bit of wiggle room. But I need my stop level nice and close by for most trades. Keep an eye on SNDK. I've been day trading this one more. And again, it's another one where I would consider there's a little resistance level first thing, 562, but I would still consider anything under the high of yesterday as an hourly lower high. This is one that also is a daily stair step. So eventually we know a daily bounce is going to take place. And if we're going to see continued relative weakness, the bears will need to confirm a daily downtrend. We haven't done that yet. So that would keep me a little bit more cautious as a bear. Just reminding myself, daily bounce can take place, and then we'll scout that daily lower high. But again, really liking the volatility in this name recently and noticing the relative weakness standing out. And that's another part of my pre-market prep, is I always want to identify where's relative strength, where's relative weakness. And it doesn't always stay the same after the bell rings, but it often enough does. And so then I can say, okay, SNDK has had relative weakness, and I'm talking about yesterday at the moment. Still has relative weakness yesterday pre-market, and I can find another name with relative strength and then say, all right, I don't know what the NASDAQ's going to do when the bell rings, but if the bulls prove some strength on the NASDAQ when the bell rings, I'm going to focus on the stronger name long. And if we drop and see weakness on the open, I'm going to focus on the weaker name short. So it's almost like having, you got a fork in the road heading into the open, and I've got to play for each direction. And then I wait for the ETF or the market as a whole to give me a directional lean, and then I go with it. And again, one of the major shifts in my trading over the last, let's say, 4 or 5 years has been going with relative strength and weakness versus fighting it. I used to look at a name that has a ton of relative strength. Let's just use this morning as an example. I would look at this and say, okay, well, semiconductors, they've got relative strength, but we're a bit extended and a daily lower high is still on the table as a possibility. So I'm going to look short on this name because we're gapping up. And sometimes it'll work, but more often than not, it won't. It's much better. It's much more forgiving. And a recent quote that I said was, you can make a bad entry, but if you're trading with the relative strength or weakness, whatever direction, it's much more forgiving. A bad entry can work out. And if I'm trading, a good entry, if I were to short semiconductors first thing and have a nice entry at the high of the day, and then we pull back and set a 5-minute high or low, good entries can end up being losing trades. It's just like the having a significant wind at your back when you're trading in the direction. You want to be jogging a mile with the wind at your face or at your back. And it has made a big difference for my results in terms of, and even just trending days. How many times have we seen a day like the NASDAQ, what it did on Friday? And, normally I'd be looking at Friday and saying, okay, we've been all bear, I'm going to scout short. And then I would fail and say, okay, well, I'm going to try again. And then I fail and stop out, and I'm going to try again. We got to roll over. There were many times where I would spend the entire day looking counter trend. And I wouldn't, blow up or anything. I'd just take a few small losses and then realize, duh, if I just went with the clear glaring momentum and what the chart was telling me, I could have had wins instead of small losses. And so that was a big shift for me. NASDAQ following through a bit. So this is, the bull flag's on the table. This is an ideal, I guess I should look at the numbers, huh? What are the numbers? No, it doesn't matter. I don't care. 342,072. I just made that up. NASDAQ. So again, we have space now, or even if we fail this resistance zone, the bulls will be looking for an hourly higher low. Let's see what Bitcoin's doing. Crypto has had relative weakness recently. It still does. Clear relative weakness in crypto. So again, if I can look on crypto-related names or crypto stocks if the NASDAQ fails high of yesterday and shows weakness on the morning. So identify where the relative strength is, where the relative weakness is. So much of my morning prep is just doing that. And then identifying what I feel is most likely in the broader market, but also waiting to see once the bell rings, what's that direction. Netflix. Still keep an eye on Netflix. This is a must hold. I have a swing position here, and yesterday was very frustrating. Still in the green, which is nice, but to get that far above daily EMA 12 and we're finally going to close above it for the first time in 2 months, and then to just fail again is, oh man, bears still got it. We got to get over daily EMA 12. It was bears defending the weekly stair step yesterday. We got within 1%. And we've been in a weekly stair step now for months. So it's a battle, but look at how key this level is. So here is where this 82 zone, low 82s. Look at this support on the way down. Held it, roll over, reject, 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 reject. And now we're trying to hold it again. And so just marking, this is a must hold. If we break 82 on the morning for Netflix, it's definitely a red flag for me. Bulls need to, there's a lot of space for an hourly lower high versus the high of yesterday. But the bell needs to ring and the bulls need to get up in the 83s if we're going to try and salvage that bull move from yesterday morning. All right, we'll go another 5 minutes here. Let's check in on our other sectors. So XLF, a little bit of green, but still well under the high of yesterday. So yeah, it's all about the NASDAQ. That high of yesterday is not far away, just over $1. And same for SPY. So high of yesterday going to be in play on the morning as the S&P 500 and the NASDAQ try for quick little daily bull flags. And if the S&P 500 confirms, we're just looking up at all-time highs. So again, as long as these other sectors are carrying the weight while Mag 7 and big tech and software is weak, that's still just fine for me as far as bull control of the market. Curious to see if IGV keeps its relative weakness on the day. Mags is going to be testing its high of yesterday. Tesla's had a nice bounce. I am going to be interested in a Tesla daily higher low. Whenever this move tops out, still a daily downtrend, but space for a daily higher low to be the result of next consolidation. And I like the weekly stair steps. It was just a stair step up for a couple months, 6 weeks, stair step down for 6 weeks, and we're attempting to set that higher low. So I'll be watching to see, can Tesla form some kind of an equilibrium, but I don't like risk reward of entry after the size of this bounce. I need a level because I can't play off of that. That's way too far away. I need a level where I can say that's the daily higher low or I'm wrong, and I'll be risking 1 or 2%. And then it's up to the bulls to prove the first daily uptrend in 2 months almost, if that's going to be a good trade. So for me, the burden's back on bears again. Bears started to prove a little something yesterday, but now we're right back to where we were in terms of bears need to prove it. Bears need to break the lows of yesterday on SPY and QQQ because they're still a stair step. And again, there's little nuances and differences. I always like the futures chart these days because it's just more information. But SPY and QQQ are still a daily stair step. The bear break on futures happened overnight to break the low of yesterday. And so it's possible that SPY and QQQ just remain daily stair steps on this bounce, depending on how the morning goes and whether or not we're able to break this resistance. But that's nice and clear as well as a guide. All right. Appreciate you watching. We'll do one ticker request. Apologies for not being able to get to them. But again, that's what we do in the Chart Guys chat room. We'll go with the first request, which was GERN. Daily uptrend guide. So it's still, this is a key short-term level, 145. It's not a clear daily high or low, but that's the level it needs to hold if the bulls are going to keep their full control. A little bit of a potential hourly rising wedge, but just stick with the hourly uptrend as your guide. Anything above 158 is an hourly high or low. And if this move's going to put in a longer term bottom, 169 is the most important level to get over, in my opinion. So keep an eye. That level is in play because if you get over 169, you're at the highest level in 8 months, 9 months at that point. And it's a longer term bottoming pattern attempting to shift. Still some proving to do. But hourly uptrend guide, daily uptrend guide, and a bit of a shift underway. All right. Appreciate you watching. Highs of yesterday in play first thing for SPY and QQQ. Check out the free trial and have a good Wednesday.